Okay, hi everybody, welcome back. My name is Craig Kern. I'm the founder and lead educator here at True Alpha Trading. We're just hopping back on here to give you an update on the price action that occurred this past week on the S&P 500 in particular in this case, as well as give you an update on my position. Again, these updates are to provide a level of transparency that I don't believe most people provide. This is also just one more tool in the tools that we provide you with our True Alpha Trading course, which is teaching you the system here that we use, that you're seeing me use right here inside of my account here. And this is just another tool for you to be able to look over my shoulder and see how I'm positioning myself and managing risk using this system. So again, today is July 19th, 2026, and we are sitting here with about 20 minutes to go before the futures open. And so let's go ahead and get into this and take a look at what occurred this past week. So I'm just going to zoom in right here on my Thinkorswim trading platform. And what I want to highlight first here is this candle bar here, which is highlighting where the market closed on July 10th of this year. That was Friday before this past Friday. And then if we look down here to where the market closed this past Friday, you'll see that the market closed right at 74.9475 on the S&P futures here. So we did have a pretty significant move lower over the course of this past week. That was about a 1.72% move lower on the S&P 500 futures here. And so a pretty big move. Now you'll see here, this is a level that we've hit, multiple times here. And we did sell off pretty heavily into Thursday and Friday of this past week. So it should be real interesting here to see where the futures open here in just a few minutes. I wouldn't be surprised at all if we do see some more volatility in here on the S&P futures. But every time we've seen a sell-off like this, it's been met with a rally or with some pretty significant buying. So we'll see if this is the first of what could be a explosive move in volatility, or if we're just rally back to highs from here. Again, coming off of Thursday and Friday of last week, we could see some pretty significant volatility that could continue into this coming week. So we'll see what that looks like here in just a little while. In the meantime, let's look at a month to date move. So the blue line here, it's marking where the futures closed on June 30th. Shows that we closed at 75.42 on the futures at the end of June. So from where we closed at the end of last month to where we currently sit on the S&P 500 futures here, that is a move lower of about 0.63% on a month-to-date basis. So a slight move lower month-to-date. And I'm just going to zoom out here to show you and highlight where we are on a year-to-date basis. So this candle here marks where the market closed at the end of last year. So to where we are now on the S&P 500 futures in this case, you're looking at still a move higher on the S&P 500 here to the tune of about 8.72% higher. So still sitting on a pretty solid return for 6.5 months here for the S&P 500. So we'll see how this continues to play out into the coming weeks. Now, I want to pause here and just reiterate that I don't look to fundamentals to position myself here inside of this system. So I'm not looking at PE ratios or income statements and balance sheets and trying to predict where the market's going to go based on fundamentals. I'm not using technicals, right? So I'm not using levels of support and resistance or channels or Fibonacci's or, take your pick, right, of the myriad of indicators that you could use in here. I'm not using any of that, okay? I'm totally positioning myself using this system based on price extremes inside of the S&P 500. And you'll see inside of our tools application that we have a whole history that this is built on. If you break down, we look to price extremes based on 51 years of consolidated history on the S&P 500. So monthly moves on the S&P 500 going back 51 years. And what we're doing is positioning ourselves around the extremes that have happened over the past 51 years. And then throughout the course of a month, I'm also managing my risk based on extreme price action inside of the S&P 500. So it's truly more of a statistical approach than it is fundamental or technical. Now, obviously, past performance doesn't guarantee future results, right? But at least in my opinion, past performance is the best indication of future results. So at least that's what we're betting on in this case, more so than fundamentals or technicals or macro data or news headlines or any of that stuff. Okay. So I just wanted to reiterate that there for you as well. Let's now flip over and just take a look at my position to show you kind of what that looks like. And I'm going to first just zoom up here to the top to show you the original position that I put on inside of here. So here at the top of the screen indicates the position that I have on. So everything that's indicated right here inside of this box, this yellow box that's highlighted on my screen, is what's driving the information down below. Now, this also is part of our tools application, and the spin calculator here, what it allows you to do is actually connect to your Schwab account so that your real-time data feeds all the calculations that are going on inside of here. So it updates for you on a real-time basis, pulling in real-time market data and doing all the technical calculations for you automatically so that you can just click through and assess different positions and overall paint the distribution of risk and reward that you want for your position. And then you go back into your trading platform separate or outside of this tools application and you execute your position. We don't connect or receive any of your personal information. The connection that we have here to your Schwab account is only for real-time market data. So we don't get any of your personal information. We don't want any of your personal information. Trust me, we don't want the liability that could come with that. Okay. So, but this is an incredible tool for making a lot of this automated and efficient for you so that you can focus more on positioning yourself and managing risk rather than having to manually go in here and update calculations over and over and trying to keep up with the market. And that's hard to do in any market, right? But especially when it's a volatile market, the market gets to moving way too fast on you to have to worry about that piece of it. So this allows you to remove all that and really focus on how do you want to position yourself or how do you want to manage your risk, day to day, week to week, or month to month. So this here at the top, again, is highlighting the position that I placed at the end of last month. So this is the core position that I'm carrying now for the month of July in this case. You'll see here that the two boxes indicated here are what we call a core position in this case. It's the core position because it's what's really driving the overall distribution of risk and reward to this position. But there is a hedge over here that I'm carrying for this month, and that's highlighted here over here under the red header. That's the hedge that I have to this position. And just something that I like to point out here is that the way that I've structured this and the way that we teach you to structure this setup is that we're actually using a portion of this core position to finance the hedge that I have over here on the right side of my screen. Okay, so just want to highlight that and note that for you. Now, all of that's kind of the technical components of this. What's more important, because the more visual aspect of this, and I'm just going to delete all this off of here, is if I scroll down inside of here, what you have is it paints a position of my distribution of risk and reward relative to a move inside of the S&P 500. So relative to whatever move we're going to see in the market over the course of this month, you have my position here, how my account is going to perform relative to that move inside of the S&P 500. So over here on the left, you'll see just percentage moves, right? basic percentage moves on the S&P 500. So if we rally higher over the course of this month, you have listed here where that's going to put the S&P 500 futures if we get that percentage move higher over the course of this month. And then you have the same thing painted here to the downside. More importantly, though, what you have listed out next to that is how my account here is going to perform relative to that same percentage move inside of the S&P 500. Now, the way that this position is structured, it's going to move lockstep with the S&P 500. So whatever is indicated here in the middle of my screen, based on that percentage move out beside it that's going to occur in the S&P 500 over the course of this month, my position should result in whatever's listed here in the center column of this tool. And then the most important part of this whole thing is indicated right here down the middle, which is showing whether my position that I have on here is going to outperform or underperform the S&P 500 based on that percentage move that we're going to see inside of the S&P 500 here. So I'll just scroll down here for you to show you that where this position is really going to kick in and put me in a good spot is if we do see some kind of significant move lower inside of the S&P 500 over the course of this month. So you'll see that I have my hedge kicking in here right at about anything below 5% move lower inside of the S&P 500 here, I have this hedge that starts kicking in and helping my position in a significant way. What's really important with any type of hedge that you place, and most of the time it's difficult to justify hedging a position because you're giving so much upside away to place the hedge or to afford that hedge. What you'll see here, though, is that I actually have a nice hedge that kicks in if we do see a substantial move lower on the S&P 500 here. And our system here is teaching you to, what you'll see here is that I'm still maintaining most of the market return inside of the S&P 500, despite, carrying a hedge against this position. So by design, what this position is going to do is if we do see a continued move higher, right, a rally from here, then I should maintain pretty close to a market return inside of my account here. More importantly, though, and right now we did close right at, what was it, 74.94 in here. So we're kind of right in here after last week's move. And, so if we do see a continued sell-off from this level, what you can see here is that I have this hedge that kicks in if we do see a significant move lower inside of the S&P from here. So with the type of move, again, that we saw on Thursday and Friday, we could be on the brink of what could be an explosive move in volatility. And, if that's the case, then I'm positioned here very nicely to help myself save some money, right? If we do see that explosive move lower inside of the S&P 500. So far, we haven't really seen that at all this year. And every time that we've kind of been on the brink of seeing it, buyers have stepped in and basically rallied us out of it. So we'll see if we're just going to get another bounce into this week, or if this is the early stages of what could be a significant sell-off inside of the S&P 500. Either way, as demonstrated here, I'm positioned nicely to catch the rebound if we do see a rally higher from here, or to have a hedge here on my position if we do see a substantial sell-off inside of the S&P 500. So again, hopefully this is helpful. One thing that I did just want to point out, you'll see over here on the far right that I do have this adjustment in here. It's the same adjustment that you saw inside of here last week. I was within one 25 cents of taking this off for a profit last Thursday, actually, before the market started selling off. And I didn't get filled on my order. So I am still carrying this adjustment. We'll see, based on some of the price action that we get over the remainder of this month, I may look to take that off for some type of a profit. But as I stated last week, my goal here now, we closed right here in this level. What I'm basically doing now is daring the market to come get me, which may sound a little bit crazy, but that's exactly what I'm doing here, is daring the market to come get me. Because from here, if we do continue to sell off inside of the S&P 500, I'm going to continue making adjustments like I've already begun to do here, and I'll just continue making adjustments and daring the market to come, to continue coming until we do run into this range here where I have my hedge kicking in for me. And so with each one of those adjustments that I place here, I'm not substantially changing my overall distribution of risk and reward or my overall position in the market here. They're just small tweaks to the position that improve my upside in case we do get a rally right off of any of these down moves that we're seeing inside of the market. So that's what I'll be looking to do this week if we do get a continued move lower here in the S&P 500. And there again, overall, I like the way that I'm positioned here against the market. And so we'll see kind of where things go from here. It looks like we did have the futures should be opening here. They are starting to move here, and it looks like, we're opening flat here. So it's holding things together, at least for the moment, better than I actually thought it would be with the open that we're seeing here. But again, we'll see where this goes this evening and over the course of this next week. And so again, hopefully this is helpful for you to see just how I'm positioning myself and managing risk and utilizing this system to do that. So with that, I hope you have a wonderful week, and we'll look to catch you here next time at True Alpha Trading. Thanks again. See you soon. Bye-bye.